All right, three, two. What's going on, everybody? It's me, Asad Hashim Ali, back again with another episode of Behind the Grind. This week's episode is very interesting because I've been following this space for a while, and I think that the situation that we are in, where there's been a big conversation about emerging Pakistan and digitizing Pakistan, now we are probably seeing us reap the rewards of all of these efforts coming in. So I thought that, who better to have on this show than Mr. Fawad Abdul Kader, sir. How are you?
I'm good, Asad. Thank you for having me.
My pleasure. Thank you for coming on. And I think the role that you're playing right now in this whole financial inclusivity exercise and digitization exercise, you're in the center in a way. You are the one that's kind of seeing a lot of this come into life, all the efforts that have been going on for the past 4 or 5 years. And you've entered, I think PayMob has entered at kind of this sweet spot where now there's acceptance from the customer side.
Yeah, I completely agree. We are at the stage in the financial service revolution, I would call it, in Pakistan, where things are about to just take off. So I think a lot of players in the industry have done really good work, and all of that is now culminating into something substantial.
So let's talk about that a little bit. This is my first question. In the past 20 years, because you also have a history and experience in the banking side, you've been involved heavily with the financial space in Pakistan. How have you seen this industry evolve to now getting to this revolution that you're talking about?
Yeah, so I think it all started way back late 90s actually, when debit cards and the POS acquiring started. It was basically Standard Chartered and Citi at that time who started this change. And of course, the adoption of it was slow initially, but of course, all the banks decided to go that route. So the early 2000s were about what we used to call it at that time in bank, alternate distribution channels, which would mean an ATM, which would mean a POS machine,
anything non-cash,
debit card, internet banking, mobile banking, but it's all based on accounts, right? Which were conventionally opened on the branches. It only happened in 2008 where State Bank came out with the branchless banking regulations. With the launch of Easy Pesa, and then Jazz Cash followed, and the wallets came in, and then you were talking about agency banking that was happening outside the banking branches, and then the fintech came in, where people who were working in the financial service industry had experience on the financial services, but came out and established organizations which were working just on pure technological developments, which would help work as a front end to the banks and front end to the lending partners or whoever, and then start to offer unique services to the market. That's how it all started.
So 2008 was that like inflection point where things would start changing.
Yeah, so a major point, yes.
Because there's now regulation for it.
Yes.
So what has led to this now rise in investment in the fintech space?
Okay, so look, we all talk about the large population that we have.
The same stats, the 33 million youth, mobile phone penetration, all of that.
Exactly, right? But we have to understand that it's a long journey, right? Because of the low literacy rates, because of the lack of awareness of people on the financial services side, of course, less financial inclusion that happened. So when we started in 2008, less than 10% of Pakistan population had financial accounts with them, or formal sort of financial services that they were adopting. So the thing is, it has been a long journey. I do understand that we have been working like for the last 15 years. If I take 2008 as the inflection point, we are sitting in 2023, where it has been like a 15-year journey that we are looking back at. So a lot of things have evolved, and of course, banks had a legacy infrastructure. So investing into new technology, bringing that up also took some time. So I think all of that did take some time, but over a lot of work that was done in the last 15 years, we have come to a stage where now the stage is set. We have acquiring players like PayMob coming into Pakistan, investing into the infrastructure. So to answer your question of why we are seeing so much investment, the reason for that is that all that hard work has set up the space in such a beautiful way that people like us can come in and build on top of it, because we have now the technology that can actually work on top of what the hard work of wallets and financial inclusion and the banks have done in the last 15 years.
So the way I see this is that it's kind of like a layered approach कि सबसे पहले जो हुआ था वो रेगुलेशन बनी थी, फिर उसके ऊपर फिर बैंक्स ने मज़ीद अपने कस्टमर्स को कन्विंस करने की कोशिश की to get them to start being digital. And then on top of that came the EMIs, and then you have more access, readily available access because of the lack of minimal KYC, not lack of KYC, but minimal KYC requirement. And then comes you, which is enabling people to make payments and transactions faster. But I feel like there are a lot of lessons for us to learn from the outside world as well, where that layered approach has worked, but then also has kind of led to some question marks to arise in this fintech space as well. Case in point is the UK right now, where there's somewhat of a fintech bust happening. There was so much money being pumped in with the whole idea of open banking and APIs being made, to now where the customer is probably not feeling satisfied enough to use the tools that are readily available. What do you feel like? Do you feel like we're even at that point to see something like this happen in Pakistan, or is there still a lot more growth in space to kind of get more accounts or more people involved in digital transactions?
Yeah, so we are far from a saturation point, or from on a point where we start to think about if it is working or not, right? Because still we are like around 30% of our population is banked. So there is a lot of room for still wallet players to expand. Then the acquiring side is still untapped. So we have like around 100,000 acquiring points right now in Pakistan. In a country where 5 million SMEs by different margins. So there is no fixed or correct or accurate number that I can quote. But by different estimates, it's around 5 million SMEs out there, right? 100,000 merchants or retailers having a POS machine is still a very small thing. So I think we at this stage are still expanding. It's yet to be seen the results that would come from all this investment. But one thing that we are sure of, because we have successful models in Pakistan that have actually worked in this space for a while, and developed the market in a way where they became positive in the economic sense of the business as well. So I think there is enough in the market if you go with the right model. If you go with a model which the world had adopted, and we have to keep in mind that the world before 2022 was different.
Yeah.
And today, after the economic recession around the world, the world, especially in the startups in the fintech space, has changed.
Yeah.
Because earlier it was all about growth.
Yeah.
Today it's all about being sustainable, being unit positive, right? So that's the difference that has come in, and I think it's a good change. It's a good change because people are tested for the business case that they are bringing to the table. Because earlier it was more about, okay, I'll go for a valuation, I'll build something up. Whether it's sustainable or not was not the question. Today, every business who's raising investments, even it's difficult to raise investments in this time, but whoever are raising investments have to prove that it's also a sustainable business model which is going to grow on its own, and it can sustain on its own. So I think it's something that's testing, but it's something that I think would bring in much good work to the market.
So for there to be this solid business case behind it, firstly, how about you explain to me the business case behind PayMob coming into Pakistan? Because PayMob is not a locally founded startup, right? Originated from Egypt. It's in UAE as well, I think. What led the founders and that team to kind of invest over here and start shop over here with you?
Sure. So we are now in UAE, KSA, and Oman, other than Pakistan and Egypt. So when they decided to expand out of Egypt, Pakistan was the first market that we came to.
Before UAE and Saudi.
Before
also.
UAE and Saudi.
Wow.
And they were mainly two reasons. One, the market was very similar because when the acquiring setup started in Egypt, we had around the same numbers in Egypt, right? 70,000 POS machines. Today they have grown 10 times that.
Okay.
Right. So, so the thing is, they did their research and they saw a lot of similarities between the market, even consumer behavior, even the inclusion numbers, and a lot of consumer behavior that we could relate to. So that was probably the reason that they decided to come to Pakistan.
Okay.
And as they decided to come to Pakistan, and as we have expanded in the last 1 year, I think the decision to come here is only more stringent because of the space that we have, right? So, like you said, what makes us look at Pakistan in a positive acquiring? So we do acquiring, right? So what we do is we digitize merchants to accept and make payments. That's the core thing.
No wallet, no investment, nothing.
No. So all of those we support through our partners.
Okay.
So we are a very focused company on payment tech. Right?
Okay.
So what we do is we work with banks as our acquirers, as our partners, and we go and digitize merchants for their payments, right? Whether it's acceptance, and we work on different verticals. It could be e-commerce that you're talking about. It could be a large retail store. It could be a corporate. Any business that's operating has to accept or make payments. And we provide them one of our tools or one of our products to do that. Okay. That's what we do, right? So that we felt that the market has the potential to digitize payments in it. And I think that's something that we are seeing in the last 1 year has been amazing for us.
Okay. And how are we doing on this digitization journey so far?
So far, it has been great. So we have now gone on to launch. So we started, our first product was the e-commerce IPG, Internet Payment Gateway, that we have already rolled out, that's already deployed. The second one was our point of sale machines, which we rolled out in February 2023. They are rolling out SoftPOS next month.
What is SoftPOS?
So SoftPOS is our application which you can download on any phone which is NFC enabled, and it start to accept payments, right?
Very cool.
So the challenge with digitizing the retail, especially when you go down the market into the SME and the micro SME, was the investment that you have to do on the device, which costs somewhere around $200, which you have to deploy at a merchant. Now, for the merchant to deploy that $200 machine would not make sense because, of course, he's already accepting payments in cash. For us to deploy it at a merchant would only make sense if it creates an ROI for us, right? There has to be a return on that investment. So what this does is this creates a hybrid model where the merchant has a phone which he can use for all other purposes, which he already does. But if it is just an NFC-enabled phone, he can download an app,
take the card, swipe it,
take the card, just tap it and charge. And one good thing that happened in Pakistan around 3-4 years back, that the regulator mandated the EMV chip on every card, right? Now, what that did for us, it created a market on the issuance side, which would work on tap, right? And most of the applications now are also having cards enabled on it to tap and pay. So the issuance side already did that in the last 3-4 years. So for acquiring to now adopt just tap and pay was a simple decision for us.
So now this is where I get a bit confused when I look at the financial space, because it's like on one side you have the banks, and the banks were previously the ones that would give all these products, and even payment solutions, payment collection solutions, payment tech as you called it. I like that. So they were the ones that were giving payment tech, even the POS and all of those things. And now you have folks like PayMob. But there's one aspect of putting the machine or the soft POS solution, or and putting that in all sorts of kiryani ki dukane. But then you also have to have customers on the other end to be able to tap the card.
Yeah.
Because that's only when it's actually functional. That's when it's serving its purpose.
Yeah.
And that's also then when you also have an upside.
Yeah.
How do you take care of the other side of this? How are you seeing that evolve? I don't know if this is like a demand supply issue or how would you frame this, but it's more like, the transactor versus the transactee in a way.
Yeah, so in payments, we call it demand and supply. The supply is the source of funds, which in this case is card, what you're talking about.
The customer.
The customer, right? Who's carrying a card.
Right.
And the demand is the merchant who's basically demands the money from the customer.
Yeah.
So look, like I said, so we have, if I were to go into numbers, Pakistan has around 50 million cards. Out of that, there are a lot of social welfare cards. So if we remove that, around 30 million debit cards.
30 million debit cards.
30 million debit cards.
Right? How many accounts are open in Pakistan?
So we have around 63 million accounts. The last figures that I read, around 63 million accounts and around 50 million wallets, active wallets. Yeah.
Wow. Okay.
So the issuance side is much more worked upon, especially by the banks and the financial institutions like Jazz Cash, Easy Pesa launching their wallets, branchless banking institutions. So I think a lot of work went there. So when you asked me if we would want to go into this space, no. So we partner with Easy Pesa, Jazz Cash. So for instance, we are now integrated to both of these players, and we accept their wallets regardless of the cards, right? So what we are trying to do is accept different instruments. So one instrument is the card itself, which is like 30 million, but then you have like 50 million wallets out there, right? So enabling them to pay is also a source of funds for us. Yeah. So it's not necessarily cards that we are talking about, it's also the wallets and then the accounts. And then a lot of lending players are coming in, like buy now, pay laters, who we are integrating again as source of funds. So our job is to make sure that all the different source of funds in the market are integrated onto our platform to provide merchants the capability to take payments from anybody who is digitized. Now, people who are not digitized, right? So there are entities doing great work there, and we would like to support them rather than go there ourselves.
So now with 63 million bank accounts and 50 million wallets, right? What type of transactions do we need to start seeing to be able to kind of make this positive for payment techs like yourself or for other fintechs in the space right now?
Okay. So what we look at is the ability of the merchant to accept payments, right? So for us, the transactions that are happening on ground at the merchant level are more important, because when you talk about the issuance side and we talk about transactions there, so there are different type of transactions there. Like, so even a cash withdrawal from an ATM is a transaction that's recorded onto this. What we look at is the transactions that are happening on the demand side of it, which is the merchant, which is basically accepting payments. Now, if we see that, that's like, you already know that it's a huge market out there which is on cash, right? The idea is to convert that onto digital, and the idea is to capture that, because if you talk about the business case comes from, so if I go into the economics of it, comes from a charge which we charge the merchants for digitizing their payments, right? And if the merchant is accepting a digital payment through us, and the volumes that the merchants are generating is large enough, it automatically makes a business case for us.
Okay. So then, is there anything that you can do to promote the digital sale even further, instead of just working with the merchants?
Yeah. So look, when we work with the merchant, so it's all connected to the merchant for us, right? But to promote transactions, you have to work on different levels with the merchant, right? So if you are, like I said, engaging the merchant with different payment methods. Like if he was accepting just cash, you are now asking him to accept cards. You are asking him to accept wallets. You are asking him to accept buy now, pay laters. You are asking him to accept accounts as a payment method, right? So you're increasing that for him. So if you're increasing that options for him, of course, his ability to sell increases to these customers.
Okay.
The second thing that we do with these merchants is we have a vertical which you call grow. right? So we go with these merchants, and the merchants who have good business volumes and have a tendency to grow further, we work out a plan with them, which could be like marketing support, which could be incentivization of their customers and things like that, discounts, campaigns that we can run with them. So what we do is we work with them to increase the conversion from cash to digital. That's another thing that we do with them. And then of course we create visibility from them. So we there is a vertical that we have which we call manage, and the idea for that is to give our merchants the visibility to of their business, right? So if I were to on a single click see how many transactions are flowing through my system, how many customers walked in, how many customers paid me in digital, we can create that visibility for our merchants, and that's another value add that we give to them. And then through our partners, like I said earlier, it's like when you have that kind of a data on the merchant, you can actually create lending opportunities for the lending partners. So we don't lend ourselves, but we create those opportunities where our partners can lend to these merchants, whether it's for working capital or whether it's like things like buy now pay later for them. So so that's creating value for the merchant. So for us, everything revolves around the merchant.
Okay, all right, interesting. So what about for the digital side of things? Because this, so far, it seems like our conversation didn't focus towards, I've been perceiving it as physical merchants in the SMEs, MSMEs. But what's your take on the gig economy and the freelance economy of Pakistan?
Yeah. So like I said, that's where we started off in Pakistan, right? So with our internet payment gateway that we came in with, we started to work with the digital side, digital online businesses, and that's something that we do very regularly. And we have a dedicated team for reaching out these merchants who are working online. We also have something that we call payment links for merchants who do not have a website, right?
Pass on a link, pay through
pass on a link. And when you talk about freelancers, we basically, when we launch our tap on phone soft POS, we're also coming up with payment links on the app. So you can have a PayMob app which you can send payment links to. And we are basically focusing on freelancers to collect their payments through this, right? So the ability for you to create an invoice, regardless of having or not having a website or having a digital front for your store, you can actually ask anybody to pay you if you are invoicing them.
Okay. Yeah. All right. And you don't keep the money. It's going straight into that person's account.
Of course. So we cannot keep the money. The money is transacted and it's settled into the person's account as per the settlement commitments that we have.
I'm sorry, I feel like this is also like teaching time for you. Okay, teach me more about the fintech space.
Perfectly fine with that.
But I want to get a little bit into what I was trying to draw a connection to with the UK fintech space as well. I want to know your thoughts on what's happened on the east of our country, in India and in Bangladesh. What do you feel like are some key lessons over there with how they've managed to digitize their payments and how they've managed to digitize? Well, fintech is quite big over there. Paytm is huge. It's massive. Wahan pe to paan wale ke paas bhi Paytm hai. What's your take on how these countries are thriving and what opportunities exist for us over here? Or what we can learn from there?
Yeah. So I think if you talk about India, government intervention was the key of the change that was brought in there. They have a unified payment rail, which we are now going to, and we have started to implement. We have RAST, which we are imagining to be the equivalent to UPI at some point in time. RAST is again a regulator's initiative that they took in Pakistan for creating a rail which would be commercially viable for the merchants to accept payments, because one hindrance right now for adoption of digital payments is the price point. So a lot of merchants feel that they do not have the margins, especially in current economic situations, they do not have the margins for paying the digital payment service providers, right? And therefore the price points needs to go down. Now, for the larger scale businesses, this might not be a big issue, and therefore you'd see them adopting digital payments easily. But for business lines or for industries where the margins are already very thin, this becomes a challenge. So the regulator is working on it. And I think one thing that we can learn is basically, so the local payment rails have a price point which is acceptable to the industry for digitizing of payments. Now, once we have that, uh, I believe, and I think the industry believes, that you will be able to digitize a lot more use cases than you have today. And you would be able to penetrate down the market and digitize any use case, because then the pressure on the price goes away. So that's one learning. The second learning that you can draw from Bangladesh is, of course, about lending and how they involved communities into the financial services through lending. And I think lending is a very important source. And this is something that I think a lot of fintechs have started to realize in Pakistan. And therefore, you see a lot of fintechs coming into this space. Of course, when this happens, you hear about all those nightmarish stories about lending. But the thing is, this is where the regulator will come in, and I believe that it would pave way for uh, uh, lending, which would be good for the industry, because businesses need capital to grow.
Yeah.
And in order for businesses to get that capital and get lending, they need to get documented, and they need to be some way be able to prove their business transactions. And payment, there is nothing better than payments in
Yeah.
that, because the more payments you clock, the better evidence you have that what sort of cash flows and what sort of fund flows you have in your business, and that helps lenders to lend. So I think these two are the key points that we can take away.
Okay, so because you have again, like as I mentioned, the point that you are at the position you're in, it's a very unique position because number one, your own track record, and number two, being in this space in this time in particular, and now there's this kind of rise of startups, and you also have more and more attraction towards the freelance economy as well, in a way. I'm saying this because I see a lot of YouTube ads of people selling courses on how to become a freelancer.
Yeah.
But I also feel like the solution that you provide is kind of, it seems like it's a very seamless experience for you to just collect money from your customers and have it in your account. That's half the game right there.
Yeah.
After closing the sale.
Yeah.
But still, we tend to look at foreign competitors. We tend to look at solutions that exist outside of Pakistan. One argument might be that money is connected directly to our overseas account, and then we can de-risk ourselves. What's your take on that? How would you manage to convince someone that, yeah, maybe it's better for you to be in Pakistan because of, I don't know, any reason whatsoever?
Yeah. So look, most of the businesses in Pakistan have local accounts, right?
Yeah.
So of only a few would have foreign accounts where they're maintaining their funds, but majority have local accounts. But as you still see penetration into that of international gateways coming in. So Stripe offers its services to Pakistan, even though they are setting internationally, and they settle from international accounts, and people actually get those funds after quite a number of days because it comes in as a remittance.
Yeah.
And then the charges are higher as well. So I believe when we talk about international gateways coming to Pakistan and offering, it's more about people's trust in the service and their dependability on the services that they provide and how they provide it, the operational efficiencies that they bring into the table. So it's about local players following suit and making sure that they are able to provide the same services locally, which we believe we do. And therefore, we don't see international players as a threat anymore.
Okay. And how do you manage to continue to build trust with the merchants to actually use a local company instead of an international company? Because not just for the sake of operational efficiency, but then there's also this factor of, what if my money goes somewhere else? And we've seen cases like that pop up too from local payment gateways. So what's your take on that?
So look, when you're talking about local payment gateways, if they are working in a structured environment, they're usually working with a bank. Even the regulators license for PSO, PSP, you have to have a settlement bank as a partner. So generally, the trust comes through the bank.
Okay.
Because if you have a bank that's working with, for instance, if we talk about PayMob is working with Bank Alphala, right? So a lot of merchants ask us that question. In fact, one of our merchants recently asked us that question: that how would you entrust us with the fact that we are basically transacting on your platform, but if you don't settle us, what happens then? And then we involved our banking partner. We got on a table with them, and we were able to show them that, look, your funds are absolutely safe because there's a settlement bank that we have that's settling you on a regular basis. So I think it's more about creating that awareness for the trust. I feel there is no how should I put it? There is no this is more of a myth that your funds would be gone rather than a truth. So I think this needs to be catered through awareness rather than anything else.
Okay. And with the current challenges that we're facing, um, what do you feel like are some opportunities that exist for us to tap into, or for more competitors, more entities like PayMob to really tap into?
So when you say current situation,
The challenge right now that I think we're all seeing is political unrest, the dollar devaluation.
yeah.
It's getting harder to do business in a sense. So, do you think that there's some opportunities that exist over there?
Look, I hope the political unrest settles soon. So that's one. Of course, that does create challenges for anybody who's operating in the country. However, this results mainly for us in an economic challenge, right?
Yeah.
In the economic challenges, I see that as an opportunity.
Yeah.
The reason for that is because we have seen a lot of investment come into Pakistan in the last 3 years,
Yeah.
right? A lot of new startups have raised money, burned money, and then just vanished, right? So the idea is to have uh, startups or have organizations create a sustainable model. And for that, you have to really create a business case and a business model that is sustainable, which does not require you to burn all the time. The one key exercise that PayMob does is a roadmap to profitability, because we understand that whatever we raise, that's there to invest, but we need to have a model that would become profitable in the future somewhere, right? So keeping a very close eye on it. Secondly, operational efficiency. I couldn't emphasize on it enough. I know I've said this before, but this is something that is key, because until unless you don't operationalize yourself in a way which is sustainable and which would give you a good service and a good repute in the market, you will not be able to sustain. So I think in these times, in these difficult times, one thing that you need to do is make sure that the cost that you are incurring on things is really resulting in some sort of a return for you. So there is no cost that goes into waste. So that make every dollar count that you're spending, right? That's very important. And the second thing is, of course, while you're doing it, create efficiency where you can multiply the effect of each dollar that you have invested, right? So I think these two are the major things. And look, every economic downturn will have an upturn in a couple of years. That's what history teaches us. So we believe that this is going to go upwards in the next couple of years. And once it does, everybody who is sustained through these difficult times by employing these tactics will have a lot to gain, because you will be in a position where you have operationalized yourself, you strengthen yourself as an organization, where you become, where you're unit positive. And then when the growth comes, you really harness that growth. So, yeah, so I think that's the way to survive in the current situation.
Okay. All right. So, I have one more question to add, so I don't want to take up too much of your time. But in that same vein, what do you feel like for you personally? What do you feel like your business needs to kind of thrive more? That could be something on the regulatory side, some easing over there, maybe the development of new policies, new frameworks.
Okay, so look, I think the regulator over the years has done a great job, right? And why do I say that? Because I think if you see the amount of regulations that have come out, starting from the Bronze Batch that I mentioned earlier in 2008, we have had in 2014 PSO PSB regulations, which is for the payment service operators and providers. Then the EMI regulations for electronic money institutions. Recently, digital banking licenses. So I think the regulator has done its bit, right? I think what we need to, as an industry, do more is come out with innovative products, research, right? So a lot of products that we come out with are designed in closed rooms, where the target market or the customer for whom the product is designed does not have a feedback. And generally you've designed that product and you think that you have done a great job because you know a lot of stuff, what's happening in maybe UK or US for that matter. And it's great that you know that and you can import ideas from there, but the local market would react to it very local in a local term.
Not getting a global context.
Exactly, right? So I think what the industry, I would put it back on the industry rather than anyone else. I think what the industry needs to do is a lot of research on what the actual consumer requires. So just to share a story with you, and I would not name anyone. So I was working for an organization during my last few years, and what I wanted to do was go into digitization of agri payments.
Or agri
payments, right? Because that's an area nobody has gone into. So you can imagine like 53 or 54% of your economy works in that area. Largest portion of your GDP comes from agri. And I don't see digital payments actually getting digitized over there. Right? It's a tough market to digitize. I'm not saying that it was an easy thing to do. But since it's tough, nobody wants to dwell into it. So nobody wants to go there. So what I wanted to do was research, right? Because if you talk about agri, every crop has a different cycle. Every crop has a different funding source and a completely different economics, right? So there is a lot of research required before you can actually even talk about digitizing payments in that sector, right? But nobody is willing to spend that time and invest into that time to actually digitize that area. So I think one thing that the industry needs to do is really invest on research of what the actual market scenarios are, because digitization is not something that you just bring or import, right? Digitization is something that you have to firstly study the manual process that's going on and change and harness that behavior into the digital world, right? So you cannot even change it completely. You have to adopt that process into the digital world in a way where it's understandable for them to adopt it. So I personally feel a lot of effort needs to go into that.
But because you say this, let's talk about this for a second. Why is there no investment happening over here? Why is there no research happening over here?
It's a tough job to do. It's to go there because it will not yield results immediately. You would need to have a 5 to 10 years vision and a 5 to 10 years agenda to do that. If I go into digitizing agri, I would probably need 6 months or a year just to invest on research, right? I would have to travel the entire country, look at crops in different provinces in Pakistan, different areas have different cycles. So I would have to study everything. And based on that, even if I do a pilot in a small thing, of course, the result of that is not that magnified. Look, we have to understand that in the financial services space, people work, and in every business, people work for profits, right? So the best idea is what gets you profitable in 1 year or 6 months or 2 months, not where you have to go and research for 1 year. So I think that is lacking.
But there's that argument, right, to be made as well, that if you go into a coal mine, it could take you 3 years to strike coal. But then when you make profits, for generations to come.
But you have to believe in that, right?
Yeah.
So if you believe in that, I'll tell you something. So if you believe in that, yes, you would go and invest.
Just gather a lot of money to do it.
Yeah.
Okay. So now, what do you think is the challenges in actually more payments being digitized? Let's talk about this from a broader macro perspective. Pakistan already. What do you see? Where do we stand right now compared to, let's say, 3 years ago? Okay. And where do you see the next 5 years?
Okay. So compared to the last 3 years, I think a lot has changed, and a lot of change has changed due to COVID as well, right? So a lot of digital payments are now being adopted because people became used to making payments digitally during COVID times, because they do not have an option. So a lot of people who would shy away from having making digital payments would now be making digital payments. So I'll share something with you. I'm doing something right now on a personal front, and it requires a lot of payments to be made. Every shop I go to, I have made a digital payment.
Okay.
They might not have an acceptance of option, but they will give me their account. So one thing that I want to take away from is, again, another myth that I want to bust is that people shy away from taxes. Because if they were, they would not offer me their account to transfer funds into those, right? It's a digital transfer. It's traceable. It's in the bank account. Merchants are open to accept payments into their bank accounts, right? I'll tell you the personal thing. I'm constructing a house. Everything related to a house, from buying ceramics to buying electricity stuff, on buying everything, I've paid it. And nobody has asked me, no, I won't want digital payment. I would take payments in cash. So a lot of people talk about that tax, people want to evade tax and therefore they are not accepting payments. I don't buy that. I believe people are accepting payments. It's mainly because they don't want to share charges. That's one major reason. Secondly, awareness onto what options that they have available to accept payments. These are the main two reasons that people do not accept payments. So in the last 3 years, this has changed. People are now willing to take their payments. Where this takes us in the next 5 years depends on how good we were. So now if the people are willing to take digital payments, it's for us as an industry, we are responsible to actually provide them options which are viable, one, and convenient for them to accept, to digitize. So I think I think there's a lot of good work happening. So I'm quite optimistic that in the next 5 years, you'll see an explosion of digital payments in Pakistan.
I have to get this out of my system. I don't disagree with what you just said. But I also feel like it has to do with depending on which SEC you work with. If two people from the same SEC, and let's say that they're an SEC A, and there's a retail transaction happening, a real estate transaction happening as well, the conversation of what's documented versus undocumented comes up. And then there's still that room for cash base, not digital payment. How do we tackle that? Because it's also a matter of then overall well-being and health for the economy too. And there's a benefit to the other businesses that are on the receiving end.
I didn't get your point.
When you sell a property,
yeah,
the property ends up, the conversation ends up being like cash kitna or bank kitna, right? Whereas the full payment could have been written through a check could have been deposited in the person's bank, or it will be fully documented, right? But that is being avoided because of the tax structure that's involved.
Not only the tax structure, also regarding the source of funds. You don't want to
clear that of the source of funds. So what do we need to do to maybe start disincentivizing those kind of transactions happening on cash? The higher ticket, the bigger ticket items.
Yeah. Look, frankly, where we are standing today, this is like the least of our worries right now. Because for us to digitize the retail transaction right now is probably the primary focus. When I see the
I'm not even talking about for you in the business.
Yeah.
I'm talking about your view on how this would help the whole economy. Right? Because what you're doing also bringing people into a documented sector, encouraging them to use that, having constant transactions, so of course going to help grow the economy there. Okay? But there's another side of the economy, which even if you're not focused on, I just want to hear your thoughts on what could be done over there.
Okay, so look, this is a process. So it's not something that will happen in every walk of life immediately, right? So as you start to initiate this process, you would see the low ticket size transactions digitizing itself first. So it's about the ticket size that you're dealing with, right? So the kind of ticket size that you're talking about the property is a ticket size that's most difficult to digitize, right? So the initial bit is to digitize the lower micro and retail transactions, right? That's the idea. Once you're able to do that and that becomes digitized, because the property sale, there are a lot of other things attached to it. The valuation of the property in the papers is something that has been debated for a very long time, and how to get the right valuation of those, right? So I believe that there are more complex issues there, which are more than just the payment leg of it. So I think that's for some expert on the property side to answer, because I think it's more to do with the valuation of the property than the payment leg. Because I believe every transaction, because payment is result of any transaction that's happening in the real world, right? Any transaction which is documented and there's an invoice value to it, that invoice value can be paid digitally and can be actually digitized, and that payment can be recorded. But if the invoice value is different, it's not a payment issue. It's an issue of the invoicing, and for that you might want to get into e-invoicing or valuation of all the properties, things like those. I'm not an expert there, so probably those are more relevant areas to look at.
Okay, all right. Thank you. Say fair enough. So, sir, I have one last question for you. I appreciate you being patient with me throughout all of this. And I did ask all of the guests this question. If you could go back in time and meet your younger son, what would you say to him?
Okay, so if I were to meet my younger self, probably I'll tell him to do whatever comes straight to your heart, because that's how I lived my life and never regretted it. So I would just encourage him to keep doing that.
Oh yeah, follow you. Right. And if there was one message that you would like to say to all those that are running their businesses right now, other than try running for sustainability and profitability, what would you like to say to them?
Be brave, because we understand this is trying times, and we understand that these times will test you. But since you asked me not to mention those, but if you're going in the right direction, be brave, you will succeed.
You're getting into sustainability and profitability. So thank you so much for your time. This was great.
It was a pleasure being here.
Thank you so much. That was Mr. Fawad Abdul Kader from PayMob. Check it out. Maybe you want to start your own online business. I'm sure PayMob can help.
Of course you.
Take care, everybody. See you in the next one. Bye-bye.